72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. I get nuts.
With your host, Phil Grande.
Bye. And welcome to my podcast. You know, two things are killing this market: buying on the dip and headlines. Now, what am I talking about? Let's talk about the headlines first. Now, we all wondered, why is it that on May 5th and May 6th that Trump put a stop to Epic Fury? We're not going to bomb anybody anymore. And he changed the name now to Project Freedom. Well, that's interesting. And even when Iran attacks our U.S. destroyers like yesterday, you thought we'd re-engage or reboot Epic Fury, but we didn't. Why? Because of deficits. People say, deficits? What's that got to do with the war? Oh, a lot. Because here's what's going on. The government each day is in the hole $5.2 trillion. So the government, like any other business, you have to have money coming in, you got to pay your bills. The government is in the hole every day by $5.2 trillion. So we have to borrow money, first of all, from the big U.S. banks. We sell them bonds, and we also sell foreigners' bonds. But the problem is our banks and our foreigners, they don't want to buy 10, 20, 30s, these treasuries. They want short term. They want 4 weeks, 6 weeks, 8 weeks, 13, 17 weeks. But we can't do that. Because if we did that, every time we have to roll them over, they're going to want more interest. Before you know it, we'll be bankrupt as a country. They can't do that. So the problem Trump is having is that we're spending more than we're taking in, thanks to Congress. And the problem is that we can't borrow money at a decent rate on these, short-term loans. So what he's done, he's figured a way out to force the U.S. banks and the foreigners to turn around and lend us money at 10, 20, and 30s. Forget these short-term loans. How do you do that? Well, it's interesting what he did. Trump figured a way to fix it. So he turns around and he'll plant a story. Now, how many stories have we heard? I mean, think about the stories. We're close to a deal. Talks are progressing. De-escalation is happening. Framework is emerging. U.S.-Iran tensions are easing. I mean, you can go on and on these stories they create like you got them from AI. So he will always use a headline, okay, to fix what he wants. In other words, he'll use a headline, like the last headline was on May 6th. This is interesting. May 6th, he has the headline, U.S. and Iran are closing in on one-page memo to end the war. Whoa, that's good. That means the war is over. Oil goes down. Every one of these plans is to bring oil down first. When you bring oil down, you automatically thinking, well, if oil's going down, inflation's going down. Now, that's good news. That's what you want the Europeans and the big U.S. banks to think. That, okay, oil's going to go down, inflation's going to go down. So if inflation's going to go down, then, I don't want these short-term bonds. I want the yields. I want the long-term yields because I want to get in and buy them as quick as I can. So, for example, on May 6th, the yield dropped from 4.42 to 4.36. That's the 10-year. So remember how this is working. They do not want to lend us money. That is, our foreign investors, they buy our bonds. And, of course, the five biggest U.S. banks buy our bonds. But they're always squawking that they don't want to give us, loan us 10, 20s, or 30s. They want to loan us short-term, weeks, 4 weeks, 8 weeks, so forth. So what happened was he plants in the story, as I just told you, the U.S. and Iran are closing in on a one-page memo, which was not true. But what that does is immediately is drop oil. If you look at every one of these headlines, just take the first three here. We're closing in on a deal. Talks are progressing. De-escalation is happening. Every time he does that, oil drops. The minute oil drops, anticipation is, inflation is going to drop. So if inflation is going to drop, then the people who buy our bonds now say, well, you know what? I'll buy the long-term treasuries because I want to lock in right away those yields. So when yields are high, and he puts in a story that automatically brings oil down, automatically think inflation's going down. Now they want to lock into the long-term rates, have high yields, and they're no longer thinking about, hey, I just want a loan over 4 weeks, 8 weeks, and so forth. So it's pretty clever what he did. That's how he's paying his bills. That's how he's raising money, by continually, every time that he'll use this headline to get oil to drop, to get inflation, people thinking inflation is going to drop, and then that's how he gets the big banks and the foreigners to buy our bonds. This is the game that we're playing. That's why it seemed like after we had that first bit of the war in the beginning, and all of a sudden it stopped. Because he's using the war, he's delaying the war, using these headlines to pay his bills. Nobody's figured this out yet. The smart money have. They figured it out, what he's doing. So now we've been going through this long period of time. Everybody said, well, why don't you just bomb them? Why don't you just go in and nail them, clean them out, get rid of the regime? No, don't do that. Because the longer that we can delay this, the longer we can play this game. Let's plant a story so oil will come down immediately, which again, right behind it, the assumption that inflation goes down, and then the big boys will loan us money long term. That's what's going on. So that's why you're going to see over and over the same thing. These announcements every week, every day, and we're not going to go anywhere. Now, on May 8th, the yield dropped from 4.38 down to 4.36. So what did the U.S. banks and the Europeans do? They latched on to the 10-year Treasury. Because the minute they think when oil is going to go down, inflation is going to go down, they want to grab that yield as quick as they can, lock in that 4.36, or lock in before it goes lower or lower. They want to lock that in. That's how they make money. So then oil dropped from $98, down to $93. But then the next day, what happened? It turned around and everything went right back up. See, the danger of this is that when you're buying stocks, and you say, oh, gee, inflation's coming down, I'm going to start buying these stocks here. The minute you get into those stocks, a day later or too late, they can flip on you and go the other way. So you got to stop buying stocks based on, first of all, don't even listen to these TV shows, okay? And generally what you want is 10% corrections. We don't get corrections anymore. We used to, but we don't get them anymore. It used to be you get a 10% correction, then what would happen is the market would pull back, and you find the stocks that didn't pull back, called relative strength. Then you buy those stocks that had relative strength. That's a good idea, right? Well, we don't get pullbacks anymore. Okay, we don't. What happens is we get pullbacks in sectors. We'll get a pullback in, let's say, healthcare. We'll get a pullback in, let's say, in tech. But we don't get the big pullback in the spiders anymore, or the NASDAQ anymore. It used to be that's where we get our big pullbacks, 15, 20% in the indices, right? We're not getting the pullbacks in the indices anymore. We're getting pullbacks in the sectors. So what happens is these indexes look better than they are. So, oh, gee, the index, they haven't gone down in a long time. Boy, the market's strong. When it's not strong. So that's what Trump is doing. And that's why, as I said, on May 8th, we had, May 6th, the yields, think about what happened. He puts in U.S. and Iran are closing in on a one-page deal, one-page memo, end the new war. Now, on May 6th, when he did that, he exactly what he wanted to happen. Yields dropped, from 4.42 to 4.36. Oil dropped from $102 to $88. Now, immediately, the big institutions who buy bonds, the banks, the foreigners, they bought those bonds right away. Now remember, the day before they said, oh, we're not going to loan to the government on long-term 10, 20s, or 30s. We're going to loan 4 weeks, 8 weeks, 7 weeks. We're not going to loan long-term anymore. Oh, but the minute that Trump puts in that piece, right, that article for peace, we'll call it, and as soon as all of a sudden the bond starts dropping, and the yields start dropping, oil starts dropping, then all of a sudden they go, oh, never mind the short ones, we'll take the long one. But the problem is you're getting caught in stocks because you buy thinking, oh, this is good, the market's pulling back. It's the same way with buying on the dip. People are getting killed buying on the dip. You got to stop buying on the dip. So as long as Trump keeps placing these headlines to try to drive the market down, to drive oil down, inflation down, so the big boys will loan us money long-term instead of short-term, that becomes very, very dangerous. So we used to always say, well, let's just mind the stocks. When the yields are going up, which stocks do good? When yields are going down, which stocks do good? So you just always, yields going up, we'll buy those stocks. Yields going down, we'll buy those stocks. Can't do that anymore. You got to buy right now. If you do that, you're going to lose money. So again, those days are gone until this nonsense stops with what Trump is doing. Now he's doing it obviously to save the country, to make sure we can pay our bills. But so think of the numbers. May 6th, we dropped from 4.42 to 4.36, and then oil dropped from $102.70 to $88, and then May 7th, yields dropped from 4.39 to 4.33. Everything's going good, right? Oil dropped again. But then we wake up the next morning and all of a sudden everything's backwards and everything's going back up again. So you're caught in stocks thinking, gee, everything's okay, but there's no stability in these stocks. So when these prices go down, you think you're going to be okay. It's only for a couple of days, then you get caught. So what you got to do, you got to start trading. Like the old days, you got to keep watching relative strength. You got to get into stocks that have good relative strength. You can't depend on yields anymore. You just can't. It's not going to work for you. And we need to get back to relative strength. If we keep doing this, same with the dip buying. The dip buying is getting insane. Retail, 73 to 93% of people lose money. Most of that contribution comes from buying on dips. Dips right now, buying on dips, you couldn't buy at a worse time right now. Buying on dips. It's crazy. Institutions are selling. Remember, when the market dips, institutions are selling and you're near buying. Hedge funds are reducing their risk, and smart money is lightening up. But you don't know that when you're buying on dips. People are jumping. Retail customers buying on dips thinking, oh, this is a good deal. They think, oh boy, I'm buying a stock that's really cheap. Boy, I'm buying good here. I'm doing really good. No, you're not. You're going to get crushed. But again, buying on the dip, it couldn't be any worse the setup right now. So it creates a fake rally. All these are fake rallies, okay? Buying on dips. And that's why more people are losing money buying on dips than anything else today. So again, this is just when retail people buy on dips, you'll never make any money. It's just not going to happen. It creates a small bounce. And that bounce, okay, it goes to the institutions, to their liquidity, and they sell. See, what people don't realize, the buying on a dip, you're always going to lose. Retail always loses. The only people that win are the big guys, the big boys, the smart money. They're the ones that are winning. See, so every time you get up in the morning, it's green, and at night it's red. Why is that? I mean, think about it. Most of the time, you get up in the morning, it's green. The market's up 35, the future's 35, 65, 75. At night, it's red, but in the morning, it's green. Well, it all has to do with buying on the dip. Remember, dip buying destroys the natural corrections in the stock market, and people don't understand that. And dip buying is a terrible thing, and more people are losing money because of it. It's destroying retail people because they don't understand what buying on a dip means. So, and also remember, when the market needs a 5 to 10% correction, okay, it resets the valuations, it shakes out the weak funds, You got to get those 10% corrections. You got to get to shake out the bad money to, clean up the leverage in there. It used to be we get these nice corrections and you clean all the garbage out, and then you have a nice trend going back up. But buying on a dip has stopped all that. It's stopped all that. We got people jumping in that shouldn't even be in the market. Now, again, if you know what you're doing, it doesn't matter. You make money if the market goes up, make money if the market goes down, yields up, yields down. But watch those announcements for Trump. Every time he gives those announcements, it's to raise money to pay our bills. That's why this thing's going to go on and on and on. But it doesn't stop us from making money. philsgang.com. Check us out.